Hello and welcome to our daily Forex market review. My name is Derek Schimming, and this review is for Wednesday, February the 20th. Now today's video is going to be unique in the fact that I'm making it much later in the day than normal. So not only are we going to be able to talk about Wednesday, but I'm going to be able to do a pretty straightforward review on what we're anticipating going into the London and New York sessions for Thursday. Now those of you who trade actively know that there were two very substantial events on Wednesday. Number one was the Bank of England's Monetary Policy Committee meeting minutes were released, and then during the New York time frame we had the FOMC meeting minutes released. Both create activity in the marketplace. Now looking on the screen, as always, I'm going to start with my currency strength index. And you can see that the market through the Aussie and Tokyo timeframes was very sideways and lethargic. Most of the currencies are moving pretty much sideways and flat with very little range or divergence between them. You can see the New Zealand traded down a little bit, but other than that the market was very flat. Once the Bank of England released their Monetary Policy Committee meeting minutes, you can see that the pound, here displayed in pink, moved down very sharply. And I know that for most of you that were watching the market, this move was too fast and too furious to catch. And it becomes frustrating because you see it move and you think, oh gosh, I've missed this. And then you look at it and it keeps going and think, should I get involved? And it keeps going a little bit more. Puts on some more pips and you realize you really have missed the opportunity, and any trade taken would be a chase. Don't feel like it's just you. When moves happen that quickly, the only way to be involved is to take a dice roll before it happens in a 50-50 bet. And that's just not trading. That's just throwing the dice. And if you're going to do that kind of strategy, you might as well go to Vegas or Monaco and have some fun while you're throwing your money away. The fact is, by utilizing the currency strength index, you can look at and see that the pound continued to trade lower on the day. It was the most negative trending single currency. So using this unique overview tool that definitely gives you an advantage and allows you to focus on the pairs with the greatest opportunity in any given day, when I have a currency that has made a sharp move to the downside and shown some weakness, the question is, will it reverse or will it continue down? Pretty simple questions. That's what we always ask ourselves. Is it going up or is it going down or is it going sideways? So when we look at this, we can see that the pound maybe initially gave the appearance that it was going to flatten out and possibly even go up, but you can see as the day progressed it continued to move down. Now I don't think the opportunities in the London time frame were that great because the moves were there so quickly. And if you look at the pound pairs, and we'll take a brief look at them, they moved by 130 to 160 pips in a very short period of time. It is the fact that the pound continued to trend lower that became the opportunity. So what we're doing is utilizing this simple tool to identify what is showing the greatest amount of strength, what is having the greatest amount of divergence from the pound, and this allows me to focus on the best opportunities of any given day or trading session. Clearly this becomes the dollar and the yen. You can see at just about the exact same moment that the pound started trading down. There's no coincidence here, the dollar started trading up, and you can see the dollar in green just kept trading up throughout the day. You can also see the yen in light blue was showing a decent amount of strength. It had this lull period in here, but then it resumed itself and continued to tick up. You can also see that the Swiss in white started to move up, but it did lose its momentum, and we were able to chart and see that. As a matter of fact, there were a couple of trades taken trying to take advantage of that fact. They just didn't quite move enough, but they weren't losing situations. If we look at today's time frame, let me clear this off of here. If we look at today going past rollover, again I have that benefit because I'm making this video so late. You can see that the pound, even though we started from rollover with a little bit of strength to the pound, again in pink and the euro in red moving to the upside, you can see that once we got into the Asian time frame, the Tokyo markets were open, you can see how the pound has been trading down and is still the most negative single trending currency in the market as we speak. Look at what's moving to the upside. You still have dollar and yen strength. So the the pound yen and the pound dollar still become arguably the best opportunities in the market, and both would be short transactions. Now look, the euro was also trading to the upside with the pound, and typically they are correlated, but we haven't seen so much correlation between the pound and the euro since the start of the year. It is an odd situation, but that's what we've been dealing with. But you can also see the pound is bringing the euro down. So the euro is trading down as well. So looking at euro yen and euro dollar short trades are also opportunities. Here just a short time ago in the room we were trading both euro yen and pound yen short with great success. And again, this tool allows us to know not only as we start to take a trade if it's the right place for us at that time, but we can monitor the levels of the CCYX and see that the trade is still progressing in our favor. It's very typical when we take a trade, we'll actually make note of, we have a spreadsheet that we will utilize, and we'll make note of where the currencies of our traded pair are at. And then we want to see those numerical codings progress in conjunction with the pair price. A very unique situation, something that creates a lot more consistency and justification to taking trades. Now let's minimize this and let's go look at those pairs. If you look at the pound pairs, and this is looking at a panel of the pound Swiss at the top right, our top left, pound dollar at the bottom left, and then pound yen at the bottom right, and I've got euro pound at the top right as a reference. You can see that when the press release came out from the Monetary Policy Committee meeting, you can see how the pound took these very sharp drops. Now this isn't based on time. I'm using a pure price technology of range bar charts, which I introduced to the Forex market. And if we can see that this breaks down a rapid price move, so if we put this on a time-based chart, your charts have just some big long candle, which really skews your indicators and oscillators and becomes almost impossible to trade. Typically you'll have to wait for the chart to settle out and bounce back from those extreme candle situations. You can see on these charts how each one of these rapid price moves was very eloquently broken down. What the key is here is that, remember, I showed you on the CCYX how the pound kept moving down, and you can see this. And remember, what was moving to the upside the most? I showed you that the dollar was moving to the upside and the yen was moving to the upside. The Swiss started to move to the upside, but we saw it lost its momentum, and you can see that in the price. It just went sideways. As a matter of fact, it traded under S2 for a while, and then once we went past rollover, again, Swiss was pretty flat, and you can see how it stayed under the pivot point, but it's really not going down at this point other than just the weakness of the pound. The flip side is looking at the pound dollar and the pound yen. And you can see, and again, remember, the dollar was the strongest single currency, and you can see that demonstrated in the pair price. So even though it made this initial move down, it gave a secondary opportunity right here when it came up and kissed off of my zone, and then just before rollover it came back up to touch the zone again and traded down even further. That is the power of my currency strength index, showing you the strength and weakness of any two currencies and matching them up and seeing what is the strongest currency in the marketplace, what is the weakest currencies or currencies in the marketplace. Basically, what's trending up, what's trending down, and what's not trending, and how does it affect the pairs I want to trade. The yen was also trading to the upside, and we can see this. Now it had a little bit of that lull period that I showed you on the CCYX. Well, here it is displayed in the pair price. It went very much sideways while the yen was in that lull. When you saw that the yen started lifting again, the pair price continued to drop. And again, these moves are coming from the zone. In this case, slightly inside the zone here, in this range here just before rollover and then just after rollover. Coming inside the zone to me is a little bit more attractive and would be an ideal situation. And that is the trades that we were taking advantage of in the room today, or tonight I should say. Now if we flip that to the yen pairs, let's change this over and go look at the yen pairs specifically. Now the reason I want to show you the yen pairs is they seem to be coming to life. If we started this week, and you know I've been following the yen pairs very heavily, specifically the euro yen, the pound yen, and the Swiss yen, and I have those three displayed here, euro yen and pound yen on the bottom, and the Swiss yen at the top left, and again dollar yen is a reference piece. I don't typically trade dollar yen myself, largely in fact based on the correlation. Now if I want to be specific and focus on the euro yen, because we've been talking about it so much in this video series, the euro yen has been locked around that 125 range since we started the week. Remember, Monday was a US holiday, And we come into Tuesday and it just really never got going. As a matter of fact, the trading range was less than 100 pips when this thing's been averaging 250 pips on a day over the last 5 and 10 day period, and over 200 over the last 30 days plus. It just did not have much trading range on Tuesday. Now the benefit is that is now starting to change, and you can see that as we got into the late stage. Here's looking at Tuesday on the euro yen, very tight. Matter of fact, I'll blow this up. Let's focus on this just for a moment. You can see it Tuesday is very tight, but Wednesday, even though it was still tracking sideways and around that 125 mark, it did make this jump up and tried to get to 126. Remember, 126 and 127, anything above 126 is finding some resistance, and it's a lofty side of this transitional period. Anything 124 or lower is coming down support and also fighting the lower band of this transitional period in the pair. So it gave a little bit of ground and went up to the upside, but failed and came back down to this 125 mark, and that is trailing along the pivot point. But you notice as we go into rollover, and again remember, with a view of that CCYX, the yen was showing strength. It took it a while, but the yen regained its strength and started moving to the upside. This is something we've been looking for and anticipating. And again, it doesn't really matter if the yen goes up or down. We just want it to move. I would prefer that it goes up because I think the downside potential in the yen pairs is greater than the upside potential. Plus the significant support and resistance range makes some great targets and ability, some trade locations to either take trades from or be looking to exit trades. So I think the downside potential is much more attractive to us as traders. So we want to see some yen strength. And if you remember, last week there was that significant event last Tuesday in the yen that I think signaled at a minimum a short-term shift in the yen, if not something more significant. And I hope it's something more significant, quite frankly. But again, it's not my job to predict or forecast the market. It's my job to look at what's happening and react to reality. And even though that sounds simple, most traders are too busy predicting and forecasting to actually notice what's happening. I don't want to predict. I want to anticipate and then be able to take the trades that set up based on what is happening. And that's why I use a pure price technology. That is why I introduced it to the market, and that's why I teach people to use it. This is the way of trading of the future. And my tools are very simplistic and very cleanly laid out. So if you look at this, you can see that not only did the euro yen move away from 125, it got below the pivot. That's very attractive. You can see a selling zone is setting up, and you can see both before rollover and after rollover the two entries into the zone where it's traded lower. More significant is the fact that it is now traded under 124. So remember, 123.50 we found support, and then we've traded down to 123 in this transitional period. So coming down to the lower end of these numbers, the opportunity for it and the potential for it to break below 123 is substantial, and then I think the games begin. So even though this week has been very muted and really lackluster, for lack of a better word, I think our opportunity as we close this week and go into next week is starting to heat up again. And again, because of the yen pair's average daily trading range, they make some of the best opportunities in the market at this current time. Let's not discredit the pound. I just showed you how the pound pairs are moving so nicely. And the pound has been having some good volatility. So let's not discredit that. Look at this pound yen today. Some of the best trades that we've seen tonight and during the Asian time frame since rollover is this movement right here in the pound to the downside. Again, I know your charts don't show this as clean as mine do because you're looking at what I consider old school technology by looking at time. What does time have to do with anything when as traders what we're trading is the price? So you need to use a more advanced system such as mine that takes it and only looks at price movement, disassembles the rapid price moves, makes them more legible, identifiable, and tradable. And in slower price environments, it's going to reassemble things and make it more, again, more legible, identifiable, and tradable. Under this scenario, every technical study, indicator, oscillator, and tool that you use will become more efficient and reduce lag to make you have more clarity of your indications, much better entry and exit signals, and decision making ability when you're using my charting technology. And I invite you to consider and come into our room and come spend some time with us and see how we use this stuff in real time. It doesn't mean it makes it easy. It simplifies the process. Trading's not easy. It is an art form that can be acquired, and we're committed to helping traders who are serious to learn, to not only learn how to use some modern day tools, but to learn how to benefit from them long term and become more consistent. So if that speaks to you, you want to take advantage of this, we want you to do so. So just drop us an email, request your free time in the room. We'll have you in, and we'll work with you and see how we can help you modify some of your behavior to become a more consistent trader. I'm telling you, as we go into Thursday and Friday, this is definitely somewhat exciting. And there's no way for me to say, hey, it's going to be a great day tomorrow. I don't know that. But I do know that some technical levels have been broken and the pairs are starting to come to life. We'll probably see some decent trading range. We're already starting to see it on the day right now. And if this continues, then we're right back where we were last week. And last week was an outstanding week. And I know that you should have been making some monies last week. I know that we did. And I'm hoping that we can end the week on a strong note, and that will take us into the following week in a very good situation. So drop me an email. Let's move forward together. Let me help you and give you a chance to see our methods, and let me expose you to my strategies and how we approach this in such a simplistic manner, and see if we can help you become a better trader long term. Drop the email to DerekSchimming@gmail.com. It's on this video, on the YouTube page, and other locations. We're more than happy to have you in. If you have some questions, post them on the videos. I'll answer them in future videos. And subscribe to the page so you can get the updates and the things that we put out to members that are looking at these things on a consistent basis. And we'd love to share our information with you. So that's what I've got for the day. Let's go into Thursday with our game face on, because I think it's actually going to be an improved situation based on what we've seen so far this week. You know, the FOMC meeting minutes came out, and they weren't as productive as what we saw during the European time frame, but it still did do a little stimulus into the market. The trades weren't really there, but I think now the market wants to react to that. We saw the equity markets react. We saw the oil markets react. So now maybe the currency markets look like they want to make up for some lost ground. And that to me is very exciting. So let's go into Thursday with that in mind. And I think the yen pairs are going to come back to life for us at the end of the week. I know the pound pairs are there. There's a lot more opportunities if we have both pound pairs to look at and euro pair and the yen pairs to look at. It really opens the door to a lot more opportunities, and maybe some of the pairs that you prefer to trade. And that's always a good situation. So let me know how it can help you. Drop me an email, put questions on the videos, and send in your request. My name is Derek Schimming, and as always, you guys have a great day trading.